All right. Good afternoon, everybody. Good morning to those joining us Central and West Coast times or Mountain. My name is Jason Devoto, Vice President of Newbie Trust. And I'm excited today because we're going to actually talk about an investment opportunity in tax liens and tax deeds that I think is really something that kind of underscores the environment and the opportunities that present themselves amidst a little bit of chaos. So obviously this is a webinar where we are open as a company. Our office here in Longwood, Florida is operational. Obviously we're taking all the necessary precautions, and we certainly welcome everybody in this kind of new normal. And rather than harping so much on what the world looks like today, we know that this too shall pass at some point, and there will be a world of opportunity created from an investment standpoint as it relates to opportunities after things get back to normal. So today we're going to walk through really what tax liens and tax deed investing is and looks like. And it's a pretty unique opportunity. And one of the things that gets forgotten in really good economic times is that people don't pay certain expenses and bills. And I think we're entering a time where we may see an uptick in that. And certainly, we never want to cheer for people to be unable to pay their bills. But we also understand that when that does happen, it creates some opportunity. And that's really where tax lien and tax deed investing comes in. A couple of house cleaning tips. If you do have questions during the presentation at all today, feel free to use the Q&A section or the chat section on your screen, and I'll be able to get those read aloud and answered for you. I see a couple things that have come in already. Let me just pause here and see what those are. All right. Well, good morning to everybody that has chimed in thus far, and no questions yet, but certainly some comments, and we appreciate that feedback. Throughout the presentation, be sure to type anything that you guys want into there, and like I said, we'll get that read aloud and addressed. So we've got about 30 minutes, and we've got a pretty fun topic to talk about today. So without further ado, let's go ahead and get started. All right. So first of all, I want to make sure everyone understands kind of what we don't do as a company. We are not CPAs, we're not attorneys. I am none of those things, not a financial advisor. Anything that we say today, obviously, is to simply educate you on opportunity, not to advise you on investments. That's the role in self-direction that you play. But understand that there may be times, depending on what you want to do, that you may have questions for us, and it may require too much personal information, or it may require us to know how you file your tax return, which is not the relationship that we have with you. And so we may guide you or direct you to seek some legal or tax advice in that process. So understand exactly what we do. We are custodians. We're here to hold assets on your behalf. But the self-directed account puts the investment responsibility to you. Make sure you've got a good team of accountants and CPAs and other legal and financial professionals if the need arises through this process. So who is Newbie Trust? What do we do? Where do we fit in? Simply put, we're a retirement account custodian. We serve a very similar role to a Charles Schwab, a Fidelity, but we do two big things differently. Number one, we do not provide any sort of investment advice, which I mentioned on the last slide. And number two, we do not limit your investment choices to stocks, bonds, and mutual funds. So clients come to Newbie when they want to use retirement money and invest outside of the publicly traded markets. And we'll talk about what that looks like, but predominantly we're obviously going to talk about tax liens and tax deeds today. We have nearly $1.5 billion in assets, nearly 50 team members here dedicated to help and assist you through the process. And really as a company, we set our sights on three things, and that is to be responsive, make the process simple, and build a great relationship with our customers. So that's our business, that's who we are, and that's how we fit into this equation. So what's a self-directed IRA? Well, I touched on this, right? The self and self-direction means you as the individual investor are the one responsible to make the investment choices. That means that you have full and complete control over your retirement account without being limited to stocks, bonds, and mutual funds. Most IRAs that are out there today are held in environments where there isn't as big of a menu, right? So think of it like going to McDonald's. You can't get a taco, right? But you know that if you want a taco, you go to Taco Bell, right? It's no different with a self-directed account. If you want stocks, bonds, and mutual funds, and that's where you believe your investment knowledge and expertise lies, then the Schwabs and Fidelities and TD Ameritrades of the world are all great resources for you. We're here to serve that customer that says, I want to invest beyond Wall Street, and I want to make investments into stuff I know and understand, whether that be tax liens or real estate or promissory notes, whatever that may look like. Newview is simply the conduit to help you get there. And you are not changing your IRA in any way, shape, or form. You're simply holding your IRA with a custodian that gives you the choice and control, right? So there's nothing unique about us that we do that allows you to own, investments outside of Wall Street, other than the fact that we simply allow it, right? Just like there's nothing preventing Burger King or McDonald's from selling tacos, they just simply choose to not offer that on their menu. So what do most investments look like? From our client standpoint, as you'll see here in kind of this sphere, there's a long list of things our clients do. Real estate, notes, mortgages tends to take up a big piece of that. Obviously, there's a lot of real estate related items in addition to that, like tax liens and tax deeds. You can invest into private companies, basically startup businesses, or even mature businesses that simply aren't publicly traded, as well as private stock, passive investments, tax liens, which we're going to spend more talking about, precious metals. Really, if it's an investment opportunity, you could probably buy it in a self-directed account as long as you adhere to a couple of rules. So let's talk about tax liens and tax deeds. And I want to start by saying, every state is different, right? So for full disclosure, I am not an expert in this subject really in any way, shape, or form, but I'm also not an expert in the nuances from state to state. I'll talk a little bit about some of the things that states do differently than each other. But so what I'm talking about here, a lot of these items are kind of to Florida because that's what I see the most just where I reside. But I want to make sure you understand your state that you reside in may have different rules and regulations. I'll start by sharing the very basics. What is a tax lien? Well, a tax lien is a lien placed on a property where the property owner has not paid the taxes. So if you kind of think about how a municipality runs, now our office is in Longwood, Florida, so I'll simply use the county of Seminole County, Florida as my example. Seminole County builds a budget on an annual basis, and that budget is based off of revenues. Well, one of their major revenue streams is property taxes. So if they believe that they're going to get $100 million of property tax money in, they've built a budget to operate under that premise. If 10% of the population in Seminole County, the homeowners, stop paying property taxes, instead of getting $100 million, they're only going to get $90 million. That $10 million could create a shortfall that doesn't allow that municipality to maintain its services and operations, which are critical. So the way that they've solved that problem is they take that $10 million of non-paid property taxes and they go out to investors just like you and offer you the ability to fund the property tax bill and earn a return in doing so. What it does is allows the municipality to collect that income so that they get that $100 million they were expecting out of their budget, and it allows you as an investor to have a lien on that property with some sort of return or fee tied to it, which is your investment return. Most places work off of a negative bidding. I can't be certain that all states do it, but Florida certainly does. Florida is a negative bidding state starting at 18%. So what that means is the municipality sells the tax lien to buyers once certain criteria are met, and bidders can bid on that tax lien backwards from 18%. So it's almost like eBay, right, but in the opposite direction, right? Someone will pay $1, I'll pay $2, I'll pay $3, and eventually it's sold to whomever is the highest bidder. In a negative bidding rate, it says, I'll buy that at 18% interest, and someone steps in and says, I'll take it at 17% interest, and 16, and 15. And as you can imagine, in very good economic times, the interest rate is bid very, very low. And most states have a minimum. I believe Florida is 5%, but again, don't quote me so much on the numbers, but just to give you an idea. But they get bid down, right? And in some cases, and if you go back to the last economic downturn in 2008, there was a lot of tax liens being bid and won at 15 and 16 and 17%. Now, if you look at the market today, right, those are all being bid at 5, 6%. And that's the way that economic cycles work. And so again, while we never, as individuals, investors, companies, et cetera, root for economic downturns, they do happen. and they are part of life, and they are normal. And so our job as investors is to prepare ourselves for the economic shifts and cycles and identify the opportunity that those economic shifts present themselves. In Florida, you can apply for a tax deed. Tax deed basically forces the sale of the property, because in a tax lien situation, you have a lien. A lien simply says this property cannot change hands with a clear title until this lien is satisfied. That's a really good thing. That means no one can come and buy that property from the current owner, because you're only buying a lien, you're not buying the property. You don't have to worry about someone coming in and buying that house and your lien disappearing, right? So when that homeowner sells that property, the next buyer, right, will have a title search done, that lien will be identified, and that lien will need to be paid off. And that's really payday for you. And on really good properties, it could be very short, right? So there are some things to be aware of, and we'll talk through those here in just a minute. But if a lien is not paid, meaning there is no new buyer willing to come in and buy the property and satisfy that lien, you can, as of April 1st of the second calendar year from the date of purchase, apply for a tax deed sale. That creates a public auction to sell that property. I'll talk a little bit more about that. So if you think about what that means as an investor, what are you buying? You're buying the tax lien, right, on the property. Your cost is the unpaid balance of the taxes. And your return is the bidding percentage that you were able to acquire that at, right? And your security, which is how I love to invest, right, is what's my collateral and protection, is that property can't change hands with a clean title without your lien being satisfied. So those are all positives through this entire process, and that's ultimately what you're buying as an investor. And your safety net, if you will, is that you can force tax deed sale, and again, all states are different, at a certain point, which would then force the sale and force the lien to be cleared off. Right? You are in a senior lien position, which is great. And tax liens are bought and sold in every state, and it's really a municipality's decision, both online, live, and then over the counter. And we'll talk a little bit about each of those. So online investing. So the great thing is technology has also caught up to tax lien investing, right? It creates a benefit, it creates a drawback. The big benefit to online tax investing is it simplifies the process for you to be able to go and access tax liens. So I live in Seminole County, but I can buy tax liens in any county in the United States that has an online auction. That's a big benefit. It's also a drawback because when I go to bid in Seminole County, right, if it's online, I'm now bidding against the entire United States, whereas before I was only bidding against my local investors, right? So you may see some compression of potential earnings on some of those because you have a higher number, right? So some trade-offs. As far as the process goes, in an IRA with us, you'll set up your self-directed account with Newbie, and then you'll go to the county. So again, I'll use my example of Seminole County and their online auction. You will set up an online bidder, right? And it's their process, right? It's like creating the eBay account. And then you will direct Newbie to fund that bidding account with however much money you want to bid. Doesn't mean you're going to spend it all. It just simply means you are going to bid. So if I said I'm willing to invest up to $20,000 in tax liens, I'm going to take $20,000 and direct Newbie to fund my IRA account at this online tax auction site for Seminole County. Then it allows me now to go bid. So when the bidding's available, I go bid through the process, and let's say I win $14,000 worth of tax liens. So maybe it's 5 tax liens. That process will deduct the $14,000 from my 20. I'll leave a balance of $6,000. I can choose as the investor if I'm going to do another auction the next week, right? I can simply leave it, or I can say, you know what, I'm done investing, I bought all I want, and I can direct the county to send the $6,000 back to my Newbie actual IRA account. Once I'm done, I need to send my purchase details to Newbie, because when you make that first request, you are going to see on your Newbie statement a $20,000 temporary tax lien asset, because you haven't actually bought an investment. You just said, I'm going to put $20,000 in a position to buy tax liens. When you finish the process, we will take the $6,000 back from the county, which will go back to your cash position, and we will take the $14,000 and individually list all 5 tax liens. But we'll need that detail to make that adjustment systematically. Let me pause there for questions. I see a couple that have possibly come in, so I'll just pause for a minute here. All right, it says, how much research should be done on the property that is up for tax sale? So let me start by saying, in my opinion, you should always do a lot because this is your money, right? There's a lot of different schools of thoughts of tax liens. Some people have criteria that they preset, right? Must be a single family property. There's certain things that they look for, right? Must be in a subdivision-based neighborhood. Those are all criteria you can choose or not choose to set, and you can go do your own research. Some people just buy them blind, and they buy as many as they possibly can, and their view is, if I buy, $100,000 worth of tax liens at 10% or above, and 20% don't pay, right, what is my return? And it's just mathematics to them, right? And that is an okay strategy as well. The beauty of self-direction is you get to deploy your own level of research, right? To me, I'm a criteria guy, so I like to know what I think the highest likelihood of success is, and I do enough research that allows me to check those boxes off to feel like I've gotten there. It says, also I often see a higher percentage of rates on out-of-state tax sales. Does each state you buy in have a lot of different rules? As far as rules go, I don't know. I can't speak to all the states, but I will talk on a future slide here about it as well, but I'll kind of touch on it. All the states have different ways that they allow you to generate return and that they allow you to get to tax deed sale. And so there's some states that are only tax liens, meaning they're a tax lien approach. There are some that are just tax deeds, so there is no even tax lien. You go right to tax deed. And there's some that are hybrids. So Florida is actually a hybrid state. You can have a lien that can become a deed, right? So there's some differences there. Florida uses a negative bidding rate starting at 18%. So that means that the maximum you can return is 18%. There are some that you can earn 2% per month, which would make the maximum 24%. So there are nuances from state to state and how they buy them, but the general premise or rule is pretty similar, right? They're all buying some sort of unpaid tax bill. What you want to research from state to state, especially those that generate higher earnings, in most cases, in all investing, if they're giving you higher return, there's likely higher what? Right? Risk. So you have to make sure you're understanding what that risk is. Is it harder to sell? Are you not in as strong of a lien position? Right? Are there things that could cause me to not earn this money? What do those look like? When you buy a tax deed, can you get the property? Does the property have to go to auction? What is meant by seasoned tax deed? So, excuse me, I'll answer that question in a couple parts, and I'll defer a couple of the parts to a future slide or two. When you buy a tax lien, it doesn't mean you get the property, right? And you should not buy a tax lien for the property. I want to make sure everyone understands that. It doesn't mean that you can't buy a tax lien, and that may be the end result. But you have to assume, right, that the tax lien will be paid before it can go to sale, because there's a period of time that has to expire for that homeowner to reserve the right to come back and pay those property taxes. So if your exit strategy is sale, and that's what makes it make sense, you're going to be really disappointed if 6 months from now they come and pay the tax lien off, right? I saw a number, and I don't know if how accurate this is, but someone had sent me something. I think it said 98% of homeowners pay their tax liens. So that is the likely scenario. They're going to pay it, right? What you want is you want them to pay it, really. As a general rule, you want to get a good defined rate of return, and you want them to pay it. You just want them to pay it as long as possible, right? What you don't want them to pay is 1 month later, and you got 1 month's return, and then you got to go buy a new one, right? So you want to find that sweet spot of good return, right? But if you think about it, the best properties are going to pay off the fastest, right? It's just the way it works. Nobody's going to let a $2,000 tax lien on a great property that has very little debt, no other liens on it, go to tax deed sale, right? It would be crazy for that to happen. So you want to find that right balance, and you want to find the sweet spot for you. Depending on your age, the longevity of your investments, your investment risk and philosophy. Some people love short-term. They just want the highest rate, and they'll just churn and burn them as often as they can. And they don't mind the work associated with it. They want the higher return. Other people try to find the balance of, I don't want the best liens, I don't want the worst liens, I want the middle of the pack liens, and I want the ones that'll pay off, in a year to 2 years, because then I don't have to it's not as labor intensive. And I'm willing to take a slightly lower return for that, but it's not as labor intensive. Those are all choices that you make. In some scenarios, you may be able to get the property, but in most tax deed sales, they're auctions. So other people can outbid you, right? I don't know of any state where automatically, if you have the lien, you get the property. It just doesn't work that way, right? But you can force the tax deed sale, which would allow you then to go bid on that property at the tax deed sale. Let's see what else has come in, and thank you guys for your questions. All right, it says, I'm unsure how you generate wealth once you buy the tax lien. So if I buy a tax lien today, a $300,000 home here in Central Florida, a $4,000 tax bill that went unpaid, right? So I buy that lien. It was unpaid as of January, right? I buy it today, and it bids down to a rate of 8%. I earn, the lien grows by 8% annually. So if that $4,000 is what's owed in the tax, from a tax standpoint, take the 8% of that, right, $320, right, per year, which is 8% of my $4,000, is added to that lien. So a year later, if that homeowner wants to pay that lien off, they can't just pay the $4,000 tax lien. They have to pay the $4,000 plus my $320, and I get that full amount, and then the lien is satisfied. So my income is at the sale of the property or the payment or satisfaction of the lien, and the amount that's owed is the lien plus the interest that the county sold it to me at based on the amount of compounding periods. It says, if you acquire a tax lien at a certain percentage, could the homeowner negotiate that percentage down? No. Right? So far as I know, in maybe in other states, but no. If I buy that tax lien, because keep in mind that the county sold the lien. The homeowner doesn't reserve the right to negotiate. The homeowner had the right to negotiate up to that point. Once I bought it, the county sold it to me, and it's recorded on against that property at that rate. They can't come ask me to satisfy it or settle it. I suppose I could, but I'm under zero obligation and can't think of a single scenario where I ever would do that. Right? Because I want to earn the money that I bought that tax lien at. And if they don't want to do that, and it's a good property, I have all the cards, because they can't sell that property, right, until that lien's satisfied. So I'm in the driver's seat, and that's the place that I always want to be from an investment standpoint. It's common for the municipality to only ask you to post 10% of your bid amount, and you are responsible for the balance within a certain period of time. How quickly are you able to fund the rest of the purchase? So for online auctions, we always fund the amount you want to bid total, because even if they do only require 10%, it's easier to put all the money that you want to use there up front. But we can, and I'll talk about this in live auctions especially, we can send that money within the 24-hour period that most municipalities require. We can do it either way, but again, it's usually easier to send it all up front, and then you have it all there, and you don't have to go through extra steps. But I'll talk through that here in just a second. All right, it says, can you explain the negative bidding process, possibly give an example? So I think I did, but I will again. When a tax lien is up for auction, you stake your claim as a buyer at 18%. It is your lien unless someone comes in and stakes their claim at 17%. If they do, then you reserve the right to stake it at 16%, someone else at 15%, and they may do 15.5%, but you get the idea. It is sold to the bidder when there's no more bidders at the rate that it's bid down to. Just like an upward auction, it's the same but downward. What is the typical rate for a tax lien in average period it provides a return? That answer is 100% all over the board. There are liens that pay immediately. There are liens that never pay and have to go to auction. There are liens that you may never get your money out of. There are liens that can be put on things like easements, right? So you have to be very careful when you're doing your research to make sure that it is a good property. You can buy liens on burnt down or abandoned or stuff that has other liens and big issues where buyers may not want to come in and participate, and the homeowner would not put the money up to ever clear it. And if it goes to auction, you may not have any bidders. So yeah, you very well could get the property, right? But it may not be worth it. So you have to kind of think through that and understand that. But there is no rhyme or reason. It has to do with the property, the municipality, and the economic times that we're in. You know, I'm not an avid tax lien investor. I'm very familiar with the process. I've worked with hundreds of clients that do or have done it. And the rates that people were getting 10 years ago are significantly different than they are today. The length of time that it takes to pay off is much quicker. You would be amazed at some of the tax liens that are available, right? I mean, there's people that share tax liens they bought on like a Derek Jeter property, and you think, well, Derek Jeter's a millionaire. Why did he have a tax lien? Well, it just means the tax was unpaid. It didn't mean that the person didn't have the money to pay it, right? So it could have been lost in the shuffle, right? If they own a bunch of houses, or maybe the accountant missed it, or you never know, right? And so there's all kinds of liens that exist out there on every piece of real estate. Every parcel of land that has a parcel ID, no matter what, has some sort of real estate tax associated to it that could become a tax lien. After I purchase a tax lien, would I have to direct contact with the homeowner? The answer is no. In fact, you have no contact with the homeowner. You don't need to, right? The homeowner's responsibility is to pay it. The county will continue to notify them of their taxes and their obligations. And keep in mind that if you buy a tax lien on 123 Main Street today, there very well could be another tax lien to buy on 123 Main Street in 12 months if they didn't pay their taxes then. Now that could be a sign that this is eventually going to go to tax deed sale, right? They didn't pay year one, they're not paying year two. This property could be going through the foreclosure process. It could be in a short sale, scenario. So there's all kinds of things that could happen, but it's not your responsibility to go try to collect it. You're not buying a non-performing note where you own the note. You're actually buying a lien, right, on that property. If a property on which you bought a tax lien is sold as foreclosure, eventually is the property tax to the county higher priority than the interest you hold? I don't necessarily understand the context, and whomever asked that, if you want to clarify, but the lien is a senior lien on the property. The county has no interest in it any longer. The county got their money and recorded the lien. As far as they're concerned, it's not their problem, right? The county has nothing to do with that lien any longer. The county will continue to notify them of future taxes that are due, but it's not the county's problem. If it goes to foreclosure, that's a bank problem. The bank is forcing foreclosure. Has nothing to do with the county. Foreclosure means they haven't paid their mortgage. So there's been a process that the bank or lender has gone through to force that. That's a positive for you. You want them to foreclose. You want someone to come in and buy that through a foreclosure auction, because at the sale, that lien has to be cleared, which means what? You get paid, right? So I've had people say, I only buy liens on properties with recorded mortgages because I got a lender that has a vested interest, right? I'm a $5,000 tax lien, they're a $200,000 mortgage note. They got way more problems than I do, but I get to get paid first, right? So they want that lien cleared. I buy tax liens in New Jersey at live auctions. They typically need to pay it, and I'm going to touch on that here. So let me go ahead and get back to the slides. Thank you so much for those questions. Keep them coming. We'll address them as we continue to move forward through the process. Live auctions, this will answer that last question. So the way live auctions work from an IRA standpoint, I'm speaking specifically about as a custodian. There are really two ways that you can handle live auctions with a self-directed IRA. Option A is to go out and set up a checkbook control LLC for your IRA. Now, we do separate classes on what that looks like. Today is not the time for us to go through that, but you can do that. Then the LLC would house the IRA's money, would have to act in the best interest of the IRA. All the rules still apply, but the LLC would then write the check to the auctioneer and be the one that funds it, and you would have full control over that checkbook. The other option, if you don't want to add that step, is simply to notify us of the auction. And what we do is we will provide you, so you'll request a series of checks from us. So I'm going to use the same example. I'm willing to spend $20,000 on my buying tax liens at the auction. So you could request from us 4 $5,000 certified checks. And then you could go to the auction, you could bid, and if you won $14,000, like my previous example, you could give them 3 $5,000 certified checks, and then they would fund back to you, right? You may have to wait a few weeks, the $1,000 difference. Or we could give you $20,000 checks, right? Most people don't do that, but you certainly could if you needed to. So that's the process for live auction. So we do not, especially in scenarios where it's under 24 hours, we do not try to fund it in 2 steps because there's a lot of moving parts. So it's much easier for you to simply authorize us up front. We'll give you the maximum amount of money you want to spend in whatever denominations you believe are easiest, and then you can go bid and buy what you want at the auction for that. Right? After the auction, you would let us know what you won, so we could then go replace the temporary $20,000, right, bulk tax lien purchase with, you know, tax lien 1, 2, 3, 4, 5, and 6, so they're individually recorded. Over the counter, this is something that anything that is not won at auction, so whether it be a live or online auction, you can actually go in and buy. They refer to it as over the counter. Some people say that's junk, don't ever go buy it because if it didn't get bid at the auction, you don't want it. Other people say if you go in there, you got no one bidding, and while some of it may appear like junk, there may be some good investments in there, and you're not bidding against anyone, so what rate would you get? You'd get the maximum rate allowable. So, again, it's all risk reward, right? If you're comfortable taking more risk because you have the likelihood of earning 18%, great, but you got more risk of losing your money. Tax deeds, and I'll address questions right after this slide, so if you have them, and we've got, I think, just one more slide left. Tax deed represents the public auction of a property for unpaid property taxes. Every state has a different point in which it gets to a tax deed sale. Like I mentioned in Florida, as a lien holder, you could apply for that, and there may be other lien holders that beat you to it, right? A mortgage holder may beat you to it via foreclosure versus tax deed sale, so you may not even need to utilize this. But a tax deed sale allows you to move that property into some sort of public auction so that it can be sold for a price and that lien can be potentially satisfied, assuming that it's bought for a price to cover the applicable liens, right? So some states offer tax liens, some states offer tax deeds, some states do the hybrid. Any overage on the auction price is not yours automatically, right? I understand there's some strategies where you may be able to claim it, but if you have $10,000 worth of liens and it sells for 20, the homeowner technically or other lien holders are entitled to that. So it would be a very weird, unique scenario. Someone pays 50 and you get all 50. It doesn't work that way, right? You get paid for your lien. If your lien says you're entitled to 8, you get your $8,000. Some states offer redemption periods as well. So if you buy a property at a tax deed sale, depending on the length of time thereafter, some states actually allow the homeowner to come in and buy it later and redeem it, right? I'm not an expert on all that, but I want to at least clue you in to look for that in the states that you occupy. So research is important. So if you think about a tax deed sale, it is just like a foreclosure sale. It is bid to the highest bidder, and it's sold because of an unpaid tax bill, right? It's a forced sale, just like foreclosure is a forced sale. So let me stop there and ask some questions or answer some questions. I think a few more have come in. One question is asking about the replay, and yes, this will be recorded and it will be posted in the blog section of our website. It says, does Newbie provide guidance on setting up an LLC, we do. We don't provide advice, but we certainly provide education on things to consider, pros and cons, whether you should or shouldn't do it, or whether the scenario is applicable to you. In fact, I recently did a webinar on that is, if you go to our website, under the blog section, and that's something that we do, a pretty regular, every month or two, something on that topic. If you prefer to do it live, where you can ask questions, but I would encourage you to go take a look there. We also have an entire team here in our office, a sales team that's happy to walk you through that process. If you want to watch that webinar, get some general education, and then reach out to us and ask some specific questions. I'm getting that we need to do research, but I don't know how to do that. Are there books or training? Yes, and yes. Research is, thankfully, we live in an information age. The drawback to an information age is there's good and bad information. I'm a big believer in Google, right, as a great starting point. The other thing I like is Amazon for books, or Audible, because you can let your peers tell you if this stuff is quality. There's a lot of people that provide investment education that is very salesy, and it's less education and more do this so I can make money, and I'm not a fan of that. And you can generally read through that in a couple of reviews and get a feel and a sense to whether or not these are credible sources. There is a National Tax Lien Association. You can just Google National Tax Lien Association that does education as well. And so, naturally, that's an industry association for tax lien investors. How is Newbie Trust compensated? So as an IRA custodian, unlike most traditional custodians who make their money off your investments, we make money off the fees for processing your investments. So all the tax liens that you buy in one process is $95. That's what you pay us. Right? And then annually, all the tax liens that you hold cost you $300 a year. Right? So I don't keep 1.5% or 2% of your tax lien profits. Right? I don't have a mutual fund load or management fees. Everything that we charge is administrative in nature, and it's based on your activity. I can assure you, unless you're doing a $500 account, fees for us are not going to be anything close to what you're paying in fees at Schwab or TD today. Ours are just fully disclosed. Theirs are baked into your investments. Right? It says, can you comment on why tax liens are sold in a package? I don't know if tax liens sold in a package from the county themselves. I don't believe they are, but I can't speak to every state. They're sold as individual liens. But there's, just like property is sold as individual property, yet people will buy lots of it up and package it and sell it. My guess is that's what's occurring there, so I can't speak to that and have no real firsthand knowledge of that. It says, do you do live seminars on tax deeds and tax liens, of course, post-COVID? Yes, all of the education content that we provide, we do live as well. If you have an audience that you'd like us to educate, we can do that both in virtual format, which we did even pre-COVID as well, depending on the location, number of people, how long we're speaking for. And we also do that live, and we'll continue to do that. Once it's safe for our team to be back out on the road, we will absolutely review and entertain those opportunities, and you can work through both our marketing and or our sales team for that. So let me wrap us up here. Thank you for so many questions. I genuinely appreciate it. So what's next? Well, you can't go out and invest in an opportunity that you think is coming without having an account that gives you the ability to do that. So we're seeing lots of people setting up self-directed accounts right now because they're just sick and tired of the volatility of the stock market. And they can't make sense out of it, and I can just point to today, right? 6.6 million people claiming unemployment, and the market goes up. It goes completely contrary to logic, and most people are saying, that's just not a world that I want my money sitting in. I rode the wave up. It was a great ride. Let me cash in my chips. Let me get off the blackjack table, and let me get into a table that's a little more certain. Nothing we're talking about is guaranteed, but there's a tremendous amount of certainty in tax liens that something like stocks and bonds can't. And what it does for you is it helps you determine what your rate of return is from the start, so you get to determine if you're comfortable, and it also gets to it defines for you when the sale occurs. And in the stock market, the hardest part is its timing, right? So you don't know your rate of return, which is scary, right? You don't know, even if it goes up, if that's the right time to sell. It's like the blackjack table, right? You make $200 and you wonder, should I get up? Well, what if I can make another 200, right? And you always wonder what the next card's going to be, and you don't know. And that's what the stock market is. You're always wondering what the next day is going to look like, and you don't know. And that just is not a place to have all your retirement money. It's not a bad place for some of it, and it's not a bad place to take a long-term approach. But as Robert Kiyosaki puts it, it is not a place where you put all your money. Right? And he's absolutely right about that. So if you want to be in a position to take advantage of the opportunities that currently are presented and will be presented, depending on what the economic impact is of COVID and all that's transpiring, it's important that you get your account set up with us. If you want to buy stocks and bonds in the meantime, we can set that up for you through a trading process that we have with TD Ameritrade, so you're not limited to non-stocks. You can actually buy some stocks temporarily, but puts you in the best position to be able to access these non-traditional investments when you feel the time is right. I'll put that up. If you do want to get our IRA guide, you can text 484848 with your first and last name, and that will give you the information. It'll ask you a couple questions, follow through that. It'll send you the e-guide, which will not talk about tax liens. It's a little bit more broad, but it's important if you're going to self-direct your account, even if you know tax liens is where you want to be, to get that broad education too, because you never know what else may be out there. While I'm doing that, let me get the last few questions coming in here. And this is our last slide, so if you do have any questions, please, now's the time to ask them as we wrap up. It says, does your senior lien position on the tax lien put you in front of every other claim on the property, for example, a mortgage? I am not an expert on exactly the order of liens. However, it is my understanding, at least in Florida, that you are in a senior lien position, which means, yes, you are actually ahead of the mortgage, right? Whether or not that's universal to all 50 states, don't quote me on that. That's part of the due diligence and research that you take on as a self-directed investor. It says, can we direct pension and profit sharing account to self-directed IRA? Short answer is yes. 401ks, 403bs, 457, thrift savings plans, profit sharing, pension plans. Any of those plans, while you are an active employee, may not be eligible. You'd have to ask the plan administrator. Any of those plans where you are no longer an active employee are 100% eligible. When you get into pension and profit sharing plans, if you're the business owner, right, or there are no employees covered under the plan, it's just you, then the likelihood of that being eligible to be rolled over is much higher. We can help you through that. I would encourage you to talk with someone on our sales team for them to ask a few questions about the status of that, and they can either give you the answer or they can guide you to the appropriate party on your end and give you some of the questions you may want to ask them to determine eligibility. And sorry, I'm a few bits away from the PC, and so it. All right, so the stuff that's on the screen now is all internal stuff, asking if we can send out the PowerPoint, and the answer to that is yes, we can certainly do that. At this point, someone mentioned that the text may not be working. I don't know of that, but we'll adjust that internally. Let's see. Yeah, so someone asked who on our sales team. If you dial into our office, it will ask you if you're an existing client or prospective client. I believe it's option 2. Push 2 and it'll direct you right to our sales team. All of our sales team will be equipped to handle that if your questions get more specific or warrant or need more senior level response. Our internal sales team will manage that directly. So we've got that, I think. Awesome. Well, thank you, everybody, for joining us. Thanks for letting us go a few minutes over. I genuinely appreciate the questions and hope that that you got some good information out of this. This will be recorded. It will be hung on the blog section of our website if you want to share it. And we'll also be sending this out to you if you've requested it. So please, everybody, through this, the unprecedented times we're facing, please be safe out there. We're certainly all eager to get back out of the new normal and back to our old normal, whatever that looks like post-COVID. But we appreciate your time, and we invite you to take a look at our website at all our future webinars. We have a series of education we're continuing to put out. And look for an upcoming announcement about a big virtual summit that we're doing on May the 7th. You're not going to want to miss that either. So thank you guys, everybody, and take care.